set a realistic goal for offers that you can make each week. And the goal here is to just force you to stay in the mindset of I got to get offers out, I got to keep pursuing deals, and I need to stay proactive. The one thing that you want to avoid doing is to become complacent as it relates to building your deal pipeline. You have to proactively build your funnel, whether that's direct to seller, whether that's continually staying in the ears of all the folks in your market that are doing deals. What's going on, everybody? Welcome back to another quick solo episode here on the Multifamily Wealth Podcast. In this episode, I'm going to be running through my 12-step process that new investors can follow who want to buy their first multifamily property. All right, so in this episode, I'm going to be running through 12 steps that new investors should follow who want to compress the time between deciding to invest in real estate and actually closing that first deal. This is going to be a very tactical episode. I'm going to give a little bit of commentary on each step to provide some level of insight, but my goal is to bang these out chronologically speaking so that new investors have a playbook in terms of where they should be spending their time and what they should be doing to actually make progress to buying their first deal. So step number one is getting crystal clear on your acquisition criteria. And this means defining exactly what you're looking to buy and where you're looking to buy in terms of price range, unit count, the property type, in terms of C-class multifamily, B-class, A-class, etc. The specific location. Now, this is more so than just a city, like a broad city or like a region. And I'm talking, you should get down into sub-market, like zip codes, sections of a town or a city, and being really precise because it's important to develop a crystal clear acquisition criteria because it strongly ties to step number two, which is becoming an expert within that criteria. I've said this a lot on the podcast. I'll say it again. Competence breeds confidence. One of the hardest things to do when you're new is feel confident about making that offer and executing on that decision, right? And the only way to get around that is to become really, really just in tune with what properties are selling for within your acquisition criteria and the locations of which you're looking to buy. So a really easy way to actually shortcut to getting that confidence is to underwrite a ton of deals, 30, 40, 50 deals that trade within your specific acquisition criteria. Now you can go and look at past deals to do this. You can go look at deals that have already sold. You can go see, all right, somebody paid X. My underwriting tells me I would have paid Y. Why is there a difference? And start to actually analyze the difference between your numbers and where properties are selling. This is just a process that's going to help you really understand what the rents are in your submarket, what the average price points are, what the market cap rate is. And then as part of this process, you're going to start to absorb who works on these deals. Who are the management companies you're seeing? Who are the brokers that you're seeing? Who are the lenders that you're seeing financing these deals? And a really easy way to do this is to just ask a broker or an agent in your market to pull a list of all the sales that have been made in your market over the last 12, 18 months. Or, if it's a really dense market and you can actually underwrite, or you don't need to go back that far to look at a lot of deals. Maybe it's 6 months, so you have a more fresh view of the market, and to just go through and look at them. And part of this is when new deals are, sent out in this market, that you get in there, that you underwrite, that you have some level of a conversation with the broker agent and start to understand exactly where things are trading for, so that when you do find a deal, you can quickly move on it with confidence. Step number 3 is connecting with 3 to 5 brokers. Now is when, once you have a real confidence in your ability to actually speak the lingo and that you understand that submarket, now you want to start building your deal pipeline. And the easiest way to do that early on is just go and connect with some brokers. Reach out to them, let them know who you are, let them know what you're looking to buy. When they send you a deal, give them really quick feedback and be really easy to work with as a buyer and start to actually develop those relationships. Step number 4 is buy a data list and start reaching out directly to these owners. Again, this can be a small data list. It could be 300, 400, 500 records. ListSource, Reonomy, CoStar. CoStar, you're probably not going to sign up for a subscription, but maybe you can go and ask somebody in your network, a broker, a mortgage broker, etc., to share a list with you. But fundamentally, what you're trying to do here is just pull a list of all the properties that are within your acquisition criteria, skip trace it with a service like Lead Sherpa, Batch Leads. There's a million of them out there. And then just start reaching out to these owners and start developing some relationships, right? Goal shouldn't be like, I'm going to get a deal. It should be, I just want to network with some of the owners around here and start trying to find deals. Number 5, sign up with a free CRM to help you kind of organize your deal sourcing activities. You can tag folks as sellers or owners, or you can tag folks as brokers or industry contacts, right? They should all be in the CRM. You should try to you take a systematized approach to reaching out to both the players in your market that are sourcing deals, as well as the owners who you're trying to connect with. Step number 7 is attending networking events. Ideally, you're showing up to in-person events in the market of which you're trying to buy so that you can get face-to-face with the other investors, with the brokers, with the lenders, etc. Now, if you are doing deals in a separate market, market away from where you live, try to get in some virtual ones with folks that are in that marketplace. Maybe there's some webinars, or maybe there's some other type of online networking opportunities that you can take advantage of to build relationships with all the players in that space. Bigger Pockets is still a great tool for this. Keyword alerts, seeing who is active in your market and actually searching the forums. Asking for referrals from the brokers that you've already networked with or the other industry providers that you've already networked with. Who do you like to work with on the insurance side? Who do you like to work with on the property management side, etc. Start building your Rolodex and start actually generating a list of folks that you can reach out to with questions as you start pursuing deals. Step number 8 is set a realistic goal for offers that you can make each week. And the goal here is to just force you to stay in the mindset of I got to get offers out, I got to keep pursuing deals, and I need to stay proactive. The one thing that you want to avoid doing is to become complacent as it relates to building your deal pipeline. It's really easy for folks, and I'm sure a lot of investors who are listening to this are like, shoot, that's just me. I'm fitting this description. To fall into the mode of I'm not proactively hunting deals, I'm waiting for deals, whether that's from a broker, whether that's from a referral, whatever. You have to proactively build your funnel, whether that's direct to seller, whether that's continually staying in the ears of all the folks in your market that are doing deals. You have to be out there doing that, or else you're going to have a really hard time actually looking at enough deals to underwrite enough deals to actually go out there and make an offer and do a deal, or to make offers, the amount of offers required to do a deal, I should say. So at a high level, you should try to make at least a couple of offers a week, maybe one a week, two a week, depends on how big your list is, how large your acquisition criteria is. But if you go a week or 2 weeks without making an offer, you should start to feel a little like, geez, we're not like, I got to start doing more to see more deals, fundamentally speaking. Step number 9 is just trusting this process and running steps 1 through 8 over and over again. Well, I shouldn't say 1 through 8, because steps 1 and 2, over time, you start to become comfortable with that. But really steps 3 through 8, which is basically connecting with brokers, utilizing your CRM, underwriting deals, etc., right? Continuing to stay on top of the market. Step number 10 is once you do that first deal, and now we're starting to get to, all right, now we're kind of around that first deal, because I think that eventually you're going to do a deal. But what's important is to talk about a couple steps that allow you to scale and to actually leverage that first deal. Once you do that first deal and you have a track record, you need to tell literally everybody in your network that you just did a deal, right? You need to go out there, you need to let the brokers know, let the other investors know, talk about it on social media, talk about it on LinkedIn, whatever, because that gives you the credibility to move up the line in regards to your ability to be higher on the totem pole when somebody else is taking out a deal, whether it's a broker, wholesaler, etc. Step number 11, and this is, again, a little bit farther down the line, but I want to mention it here, is to build out some very simple email marketing process. And when I say email marketing process, I mean getting all of the folks that you're networking with, maybe long-term sellers that you have on a follow-up list, maybe all the brokers, maybe all the wholesalers, the other investors that you network with, the insurance providers, the title companies, the attorneys, all of these people. Get them on some simple monthly newsletter where you send them valuable content on a recurring basis that you think that they would find interesting. Local news, market stats, maybe a little blurb business updates so that you can plug your business at the end. But that makes it a little easier for you to stay in the ear of everybody who's out there doing deals and who's in the mix and actually looking at or is in the middle of deals occurring. Because you just want to be top of mind. That's the easiest way to scale your funnel in terms of seeing more deals, making more offers, etc. Step number 12 is just repeat, right? That's just run all of this again. You just got to continue repeating these steps, similar to step number 9, trusting the process. You got to repeat. Step number 12, I say repeat. Another way of describing this would be don't become complacent, which I touched on that in terms of making offers and setting goals around making offers. But step number 12 is really driving that home, where it's like, you can't just assume that because you have a good relationship with someone, because you've done a deal with them, you did a deal a year ago, and you chat every once in a while, that you've earned the right to do the next deal with that person. Just because you've done a deal with someone, just because you've stayed top of mind with people doesn't necessarily earn you the right in perpetuity that they're going to be bringing stuff to you. You have to continually refresh those relationships, bring value, etc., and work a lot of these steps on a recurring basis over and over and over again, really in perpetuity. If you want to continue staying top of mind, you want to stay at the top of the market as it relates to the amount of deals that you see. And again, part of what I talk about in this podcast all the time is your greatest negotiating tool as an investor is a large deal funnel because you never get emotionally attached to one deal. The easiest way to do more deals is to make more offers. The easiest way to make more offers is to see more deals. The easiest way to see more deals, again, working up the funnel, more volume on the direct to seller side, more volume on the relationship development side, right? So again, we're trying to solve for that goal in a lot of different ways here. That said, those are the 12 steps that I would follow if I were looking to buy my first multifamily property or my next one, frankly, if you already have a building or two and you want to more proactively grow your portfolio. If you found this episode valuable, please leave the show a rating and review. Helps the show get noticed by more folks. And that's fundamentally the goal here on the podcast is to help more multifamily investors grow their portfolios. So take 2 seconds, leave a review. Literally takes 2 seconds, would be much appreciated on my end. But I will catch you guys on the next episode.